Oh my. What a difference a week makes. If there's one thing I know about the real estate market, it's this. It's very unpredictable at times and can rapidly change on a dime. And that is exactly what happened this week. And if you've been paying any attention to the mortgage market over the last several days, you know exactly what I'm talking about. If you haven't, then stick around because we're going to unpack it all and I'll show you how the latest economic news might be pumping the brakes on the housing market right here in Charlotte. And we're going to crank it up right now. If this is your first time to the channel and you want to know everything there is about living, working, and playing in Charlotte, North Carolina, then subscribe below and click on that bell for notifications so you can be the first to learn about everything that is happening in the Charlotte real estate market. My name is Brian Taylor and I'm the owner of Dreamline Realty. My team and I are passionate about helping people make a move to Charlotte and make Charlotte their home. And we get calls, emails every single week from people just like you that are looking to make their move to the Queen City or already live here looking for their next house. So whether you're moving in 2 weeks or 2 years, we'll be ready to go when the time is right for you. Just give us a call, shoot us a text, send us an email, or better yet, schedule a Zoom call with us so we can put a face to a name, get familiar with your situation, and help you plan your smooth move to Charlotte. And there's a link in the description below that will take you right to our calendar. So just last week, I released a video in which we discussed some factors that are starting to show a cool down in the housing market. And in that video, I mentioned that we would see interest rates cross over 6% within the next 8 months. Well, folks, I never expected it to take just 6 days. Yes, that is correct. 30-year fixed rate mortgages have skyrocketed from 5.5% last Tuesday to 6.28% today. And the crazier news is this increase likely is not over. So here's some news from Mortgage News Daily on Monday, and it reads, mortgage rates surge well into the 6% range after one of the worst days in decades. So what is going on and why did interest rates skyrocket so fast? Well, the answer to that question is due to a little dirty word called inflation. On Friday of last week, economic news was released, and an article from CNBC reads this. Inflation rose 8.6% in May, highest since 1981. And that news showed the country that runaway inflation is worse than economists had predicted, and we're now in a situation where it must be tamed immediately. And as we've talked before, the only way to tame inflation is to raise the Fed funds rate. If you recall from my last video, I mentioned that raising the Fed funds rate is not a one-to-one increase in mortgage rates, but it does normally follow the long-term path. Again, going back to Mortgage News Daily, it reads, the Fed funds rate doesn't directly dictate mortgage rates, but movement in the Fed funds rate hike expectations does tend to coincide with movement in mortgage rates. Said another way, mortgage rates don't really care when the Fed actually hikes or cuts its policy rate, but they do care when the market changes its views of what the Fed will do in the future. And the last sentence there is where we have the issue, when the market changes its view of what the Fed will do. So here's what's really going on. Up until last week, everyone was expecting the Fed to raise rates at their June meeting by 0.5 point. But when the CPI data was released last week showing an 8.6% inflation rate, it became apparent that the inflation was more out of control than we thought, and now everyone is expecting the Fed to get extremely aggressive and increase their rate hike higher than what was expected. Meaning expectations are now that the Fed will increase rates by 0.75% or even 1%. And when the markets hear news that coincides with the expectations, panic sets in and the markets adjust. And the reason we're seeing mortgage rates rise so quickly is because the bond market or mortgage-backed securities market is prepared for the worst and is going to do its best to position itself. So where do we go from here? The only thing we can do at this point is to see what the Fed actually does and see how the markets react. But here's the thing, inflation is a huge problem right now, and the Fed is prepared to raise rates farther in July, August, and maybe even into September in order to get it under control. So to put things bluntly, mortgage rates are going to be extremely volatile as we progress the next 60 to 90 days. They will likely go up sharply and they might even come down sharply, but the overall trend is to continue to rise. If you're a buyer and you're currently under contract, You need to have a tight grip on your lender and watch this thing like a hawk and get locked in based upon their recommendation. My best advice for you is to not play the market. What I mean by that is don't think about waiting it out a few days with the expectation that rates might come down a little bit by next week, for example, because you might get burned. Just my 2 cents on that. Now, let's shift gears towards the housing market. With rates rising, this obviously is going to have an impact. Up until last week, though, we were only really seeing a slowdown in the $300,000 to $450,000 price range, but I think we're going to see significant changes moving forward. Over the weekend, we've seen things we haven't seen in quite a while. Number one, there is new construction inventory by several builders in the market that came on the market that has not sold yet. Now, we've had builders release houses for highest and best offers that didn't get any offers or offers too low to take. This in itself is very interesting as new construction has been in high demand forever. So do these signs point to a pumping of the brakes in Charlotte? Well, I can't confidently make that determination right now, but if what we're starting to see is any sign of anything coming in the future, these rate increases are impacting all sorts of price ranges right now, and I think that's going to continue. Second, we've seen a few price decreases as well. So this tells me that buyers are becoming less active and sellers aren't getting the showing activity that they were expecting within the first few days of their listing. In addition to that, more inventory has come on the market, so buyers have a few more choices. But overall, I can feel a shift, and in my opinion, it's a much needed shift. Call it a shift or call it a market correction, you choose. But either way, it feels like something is happening right now that hasn't felt normal in a while. So stay tuned to more market updates as I do my best to bring you everything I'm seeing in real time. And do me a favor, in the comments below, let me know what your take on the market is and what your thoughts are. I would love to hear what you have to say. All right, guys, that's all I have for today. If you haven't subscribed to the channel and you want to be in the know on what's happening in the Charlotte real estate market, click that subscribe button now and then tap on that bell for notifications, as I don't want you to miss out on any videos that I release every week. And if you're interested in some neighborhood tours, check them out on the channel, and you may especially want to check out this one that I did with MI Homes in a neighborhood called Stallingsbrook. And as always, thanks for watching. Make it a great day.